Welcome to another stage analysis video. This week's video is going to be on a special feature covering the software group. I last covered this group around a month ago, where we started to see a proliferation of stage one bases within the software group, which is quite a big group. To be fair, it's got close to 400 stocks overall if you list it out completely. But once you strip out the over the counter stocks and stocks underneath $5 or so, it cuts it back down by around a quarter or so, just under 300-ish. But still quite a sizable group compared to many. For example, the semiconductors group only has around 90, and some of the others have much less than that. So it's quite a sizable group, and one of favourites with a lot of the growth investors and traders, etc. So I think it's an important one to track, especially as we start to see stage one bases. So a big part of Stan Weinstein's method is obviously tracking stocks as they start to make the transition from stage 4 into stage 1, so that you can potentially start to you can be ready in order to get the actual stage 2 breakout point or earlier entry points within later part of stage 1 using the Wyckoff entry points. So in order to get to stage 1, obviously many stocks actually have to break out into stage 2, as obviously many you can't, everything doesn't go at the same time. Everything isn't just in stage 4. When the group is declining in stage 4, the group is an average of the individual stocks within the group. So some stocks are going to be breaking out into stage 2, some are still going to be lagging in stage 4, and others are going to be starting to build stage 1 bases. So we've seen a lot of stage 1 bases developing within the software group over the last 4 or 5 months or so. Started to develop in early May. I did an original video back in May, if I remember correctly. There was some of the earlier stocks. It was, at the time, it was the IPOs, some of the younger IPO stocks that were starting to form the bases first. And then later on, we started to see more of the more developed stocks that had the larger stage 4 declines start to base as well. So some of those have got much smaller bases, but we'll go through them in a little bit, have a look what's been breaking out into stage 2 and which are starting to develop in stage 1 and are approaching potential entry points and entry zones. So, and how the group is doing as a whole, whether it's getting better or getting worse. So I'll start with the ETF, which is the IGV. So this covers the group fairly well, tracks the industry group chart reasonably well. It's a little bit underperforms it slightly. It's had a bit of a deeper stage 4 decline than the actual industry group chart did, and its relative strength score is much weaker than that. You can see the relative strength line has been, while it's been basing, it's been reasonably flat. It's not been outperforming the S&P 500 down here. So it did perk up a little bit through May to June time, but it's basically been going sideways in line with the market. But you can see compared to the S&P 500, it's still a long way below what it's been doing. So we need to see this start to dramatically improve, ideally, in order for this to become a leading group once more. At the moment, still got this declining 30-week moving average in here. The 10-week moving average, although it's starting to rise, is still below that declining 30-week moving average. The last video I did, we were up and around this point, and we just started to see the change of behavior, and I identified it as the start of stage 1 starting to move into the early part. As you can see, compared to these previous swings, it started to had a much broader move, much more participation from stocks in the group. So there was that shift from potentially being in stage 4 to transitioning into the early part of stage 1. Sometimes those continue through and you get into early stage 2 very quickly, but in other times, as we've seen here, and as I mentioned on the previous video, you go through the various phases of the range and start to pull back is not unexpected as a secondary test, as you have your selling climax into an automatic rally and then secondary testing. So at the moment, potentially we're forming a higher low secondary test. Could still come all the way down to the bottom of the structure and still stay within stage 1, although it'll be much weaker at that point. But you can see this structure that's been developing with the upthrust and has come back in again. So if we drop down onto the daily time frame, you can see this a little bit more clearly. See the selling climax, automatic rally, secondary test. We move into phase B. Then we had an up thrust at the top of the range here. So if we define our initial base structure, then it started to come back into the range and fall over. So at the moment, this could be a redistribution base. It could continue down and start to fall over and go lower, but it could also form a spring at this point, or it could form a higher low where it is and start to move back up again. So with the bullish scenario first, at this point here, with the market initially starting to turn today, if this structure within here is we've got a little test within slightly higher low. So if this starts to come back out again, recaptures that 50-day moving average, we get a sign of strength back out of the base structure again, and it starts to push back up through the top of the range and out, then we'd want to see that get back above that 200-day moving average, which would then start to flatten out. And then on any pullback, we wouldn't want to see it come back into the broader structure. So ideally, this broader structure that's been developing, you wouldn't want to see it drop back within that. And then secondary entry point is as it pulls back in and starts to recover and turn back out again. So with the stage analysis method, the stage 2 breakout point would be on a breakout above this range here. So if we mark the range and above the 200-day moving average. So if it did happen around this kind of area, then potentially you could have a stage 2 breakout in here. From the Wyckoff perspective, potentially we start to turn in this area here, then potentially all of this zone within here is a potential entry zone if this becomes phase C into phase D. It's a big if at the moment still. We're still developing. So we get back to the weekly chart here. From a weekly perspective, potentially we've only had a selling climax and automatic rally and a secondary test, so we're only in phase A on the weekly structure. On daily structure, obviously we're potentially in phase C or phase D of a distributional point at the moment, but if it does turn here, then this could become phase C. That's why ideally it's good to have a shakeout at the bottom of the range and a spring, because then that clearly identifies a phase C type area. So you'd be moving out of phase C and then you would have phase D. So this would mark potential entry zones if we did have that shakeout. If you don't get the shakeout, it can be a lot harder to identify. But obviously, again, this is a group ETF. This isn't the individual charts. So a better way of looking at this is actually to go into the individual charts and see what they're doing, which we'll do in a sec. Let's drop down to the 2-hour time frame quickly, so we can see what's actually going on the intraday. So it's gone through the stages. You can see we had a stage 2 advance through late July into August, rolled over in the stage 3, started to turn down, moving into stage 4 decline, and then making lower lows. And you can see this, the volume here was moving up as this was dropping down. So we got an increase in the volume as this was declining in stage 4 here. We made a potential selling climax at this point in here, automatic rally. So we start to mark a base structure again. So selling climax, automatic rally, secondary test, slight undercut there. Now we're moving into phase B of this structure. You've got a sharply declining moving average here still, but you can see the volume has been declining as this structure has been starting to develop. So a little bit of a shift from the stage 4 decline on the intraday there. So it is attempting to form a base here and turn. So if we go back to our daily chart here, you can see this from this minor little structure within here is the start of a potential base within here. If this can push out early, this little double bottom type pattern here, then push back up through that 50-day, then that would be more bullish for the group again. But again, as I said, at the moment it's very tentative at this point. We've got a developing structure here on the daily chart, which could still be redistributional, but it could also turn here and turn into a phase C. So we will see. But let's move on now into the individual stocks, as that's where we'll get much better information on the group. Okay. So first up today, I wanted to show was UDMY. So as I said, there's around 200 and I think I've got about 290 so stocks in the group today, with if you drop out anything below $5 and over-the-counter stocks or so, and this is using the stock charts groups here from the IBD, not IBD, the Dow Jones US industry groups. So they'll obviously, all different platforms have different definitions for the groups. The IBD groups are much different to the stock charts groups, and trading view groups are different. It's whatever software you're using, it's going to give you differences. But from this, it gives stock charts gives a fairly good broad picture and seem to catch the vast majority of them. So starting off with, one thing you can do with the groups in order to help yourself when looking through such a big group as this. So like I said, there's almost 300 stocks, so you don't want to have to go through 300 charts every time in order to mark them up and start to see what's going on. So you can make the process a little bit easier if you go into summary view here. So we'll quickly flick through into this. You can see I've got these numbers on the side here. So what you can do is you can get your columns up. You can add the SCTR score here. So you add the SCTR line. Then if you click that and then flick by order, some of them won't have an SCTR score as they're too new. They haven't yet got all of the attributes that they need for that, like UDMY, for example, there. But basically, if you order them by the SCTR score here, if you then scroll to the bottom, as I said, there's 266 at the moment in here. I have deleted quite a few as well. There's a little button at the bottom here that says number in sorted order. So if you click that, it then adds these numbers to the front to here. And then that basically, when you then go back into chart list temper page view or continuous view as I have it in, it then, these numbers at the start here then keep the order of what you just had it in, what you had it sorted as. So that then means, obviously, if you only want to be looking at the strongest relative strength stocks first, you can, as you start to go through them, and as you start to quickly scroll through, you'll start to see what's going on in the group. You can start to mark them up, and the very strongest, so you might only have to go through 40 or 50 stocks before you start getting into stocks that are still deep in stage 4 and are of no interest whatsoever. And you can go through those more quickly until you see some that might still be outliers within there that haven't been numbered up properly, etc. So, but that is one little tip that you can do in order to make the process a little bit easier. So, as I said earlier in the video, there's a big part of the method is actually going through the individual charts in the group and marking them up and then tracking them as they start to move through the basing structure. One of the reasons I do the watch list the way I do and highlight stocks multiple times through the base structures is that we're obviously trying to catch them at the ideal entry zones in the late part of stage 1, early part of stage 2. So for example, UDMY here, got a stage 2 breakout today, highlighted UDMY multiple times over the last few months or so, and I think I highlighted it again yesterday as well before today's breakout attempt. So I think he had a pretty good move today. Let's go into it on the daily chart. See here, I had a 7.85% move today. If I whack on a log scale on this, it's obviously still quite young. It's quite a big move. So from the structures that it's had, you've got this lower structure that developed, and then that up thrust that broadens out the structure. So you can, with the broadening out, it happens quite often. You get an up thrust, not generally that big an up thrust. It's a bit of a major failure there as it came back in again, and you get the up thrusts and shakeouts. So these kind of moves where you get springs, shakeouts at the bottom of the range, and you get small up thrusts at the top of the range. So this one really did broaden out the range on this, and then we got this secondary structure that formed in here. So you can see over the last month, this has been forming very, very tight action. You can see this declining 200-day moving averages coming in on the 21-day. So from this, you can mark your stage 2 level that you're looking for. So you can see today it's broken out of this minor structure here. It's broken some other levels, slight decline on that. Obviously it's not completely clear of overhead resistance yet, but it did have a reasonably strong move. Not sure on more around 2 times volume. Not sure it's made the 3 times volume requirement today, but it did have a decent move, and it is an early stage 2 breakout attempt. So go back to our weekly chart here. You can see that a little bit more clearly. See, it's a little bit of a double bottom base on this one. overall with this little higher bit in here where it started to consolidate in a flag before attempting to break out. So now we're going to look for this to follow through, and then potentially, obviously, you'd want to catch it on the back up if you're looking for a secondary entry zone, and then following throughout into early stage 2. It's obviously been in stage 4 since it IPO'd. It immediately dropped off, one of those pump and dump type patterns, I think they call that one. So, but it is interesting now, starting to break out of this stage 1 base structure that's been developing since early in the year. This was one of those ones I think I highlighted back in early May, as it had a reversal spring type action at the bottom there and was starting to move out. So you can obviously got your initial structure from back in this area, then it broadened out. So we've got a structure from all the way back from February, March time. Obviously, you can include the trend line behavior from a little bit earlier than that. So it's quite a decent size structure on that now, and attempting to move out into stage 2. Number one that I highlight